With the purchase option, this is the other lease end term that we have available in Nakisa. Of course, similar to what we've seen for termination option. If you have such a term in your contract, you can add it. You can add it from the beginning. You can add it through the life of the contract, and you can reassess it later. For those of you reporting under US GAAP, please keep in mind that if you have in your contract or the probability of introducing a purchase option is high, you want to classify your contract as finance, as you won't be able to change the classification later on. If you do, and if the purchase option is not likely to exercise and you have no reason to do that at the beginning, and you confirm the classification as operating, then the only other choice is to close and start from the beginning with the finance classification. Once again, you can make use of the contract expiration report and the data quality integrity report to check the purchase options that have been entered. If you do not have the purchase option added, then similar to what I said for termination option, you might want to have a different type of referencing for those contracts. You want to plan for them in a different way. So similar to the termination option, you can add it through a list modification, you can reassess it. One point very important here, if you want your purchase option to really determine the end of your contract and not simply be an extra payment in the minimum lease payment list, you want to make sure that the early buyout check is on. And once you do that and you exercise the purchase option, this is how it will look like. The purchase option in most of the situation has a value associated to it, and you will also see it in the lease and lease payment column. It will be an extra payment. And of course, the resulting adjustment really depends on the combination of terms that you have. Yes, the purchase option most likely will also reduce the validity term of the contract, but not the penalty, but the repurchasing value most likely will be high enough in order for you to see an increase in liability and right of use asset. Once again, any other combination and is possible. Once you exercise the purchase option, of course, you will have to post all the remaining transaction, perform the lease and perform the close. And once you perform the close, you will have the asset retirement and the transfer to the owned asset. So you will notice here, we are in a different type of entry situation. Of course, the remaining balances on the liability will really depend on the terms and conditions that you have. So let's go to the case that I prepared here. We have case number 3. I have a purchase option that is already entered, but I need to exercise it. So in order to do that, from the activation group level, I'm reassessing and I'm choosing early buyout this time around. I do not want to change the contract rate, but of course, this is a decision to be made based on internal policies that you have. And with that, the contract is going to prepare a draft for me so I can exercise the purchase option. And let's see, we go directly to the to the terms and condition. We are exercising the purchase option. We are making sure that the early buyout is on. If it's not on, you can always do a list modification because you will be able to do that to change that from the contract level. I can send to assessment. I made the entries up to December, so I can choose the effective date in the first period with no periodic posting, so that is January. And I can check now the schedules to see what is the effect of the purchase option. All columns. Of course, I'm targeting 2023, but I can also choose all years. I have my green line here, and you can see my payments are stopping after March, but I have an extra payment here, the lease and payments, similar to what we see into termination option. However, the value it is expecting to be higher. In the list of minimum lease payments, I see my entry here, and I will check my deltas by how much the liability and the right of use asset is affected. In this case, once again, because the reduction I'm getting from exercising the purchase option in March is higher than the value that I'm introducing, it's a reduction. But you can also have an increase, as I was showing in the other example in the slides. Now, of course, being a purchase option, once we exercise the purchase option, the rules for depreciation are changing. So the system is no longer considering the terms of the contract, is considering the actual useful life of the asset. So you can see the change in depreciation here. And it is to be expected, but my net book value will not be zero at the end of my contract once I exercise the purchase option, because this is the value that we are transferring to the owned asset. So with that, we can complete the draft, confirming the classification, and of course, we can complete the remeasurement. And once we'll do that, we'll be able to see the actual adjustment that the exercising of the purchase option has produced. And after that, the last step that we need to do is also making sure that we are posting the remaining entries, the remaining periodic posting, so then we can perform the lease add. So let's check at the unit list. We have here the early buyout. Once again, the effect on the asset, it's a credit, it's a reduction in the asset, and also on the liability is a reduction in the liability. Having double reporting, US GAAP, IFRS, I have two pairs of transactions for each. And now I can go into the view postings. I can check all years, and I want to make sure I'm posting all the remaining entries that I have in here, and I'll try to do this super fast. Of course, you always have the batch features, and you will be including this in your month-end process. You don't need to do that manually. Also, if you have a job scheduler in the back end, it will be taken over by the already scheduled job that you have in there. In the last period, I only have one payment left. Depreciation, it's normal that I don't have it. The accrual, it really depends on the terms and conditions. Now I need to also do that for the other standard, so I can really move on to the lease end. Just a few more here. One accrual. Okay. All right, two more transactions to go. And my last payment. And with that, all the periodic postings are done. And if we come back here and we click on refresh, the lease end is available. So we can already perform the lease end. And with that, once again, we're setting up the end date for the units. We can choose the 1st of March. That was the intention. So once we do that, the close is also available. Similar to what we've seen before, if ever there's any balance on the liability accounts, we will see it here. And once we confirm, the system is going to post a retirement transaction. And this time around, it will be different because we are also transferring to the own asset the remaining balance on the gross book value and the accumulated depreciation. So this really depends on the mapping that you have for the accounting determination and the asset accounting determination in the back end. So just really quickly to see what happens in the schedules. We can check here that we have the retirement for the asset. We have the reversal of the accumulated depreciation. The net book value now is 0. And of course, if we check the short-term, long-term liability, all the balances are ending up to zero.